Thank you for joining us for today's session. Good afternoon, everyone. I want to appreciate you for joining us this afternoon. We are getting started now. I want to be sure that you can hear me clearly. Please confirm by leaving a message in the chat box if you can hear me clearly. I want to be sure that my audio is good for you. Kindly confirm. You can just drop a message to let me know if you can hear me clearly. Good. Thank you, Mr. Jegede, for that confirmation. I want to welcome you once again to another session in our webinar series. In the past few weeks, we've been dealing with a very interesting topic: for-profit pooling forest trading strategies. For-profit pooling forest trading strategies. We've already considered the trend following trading strategy. Last week, we also looked at the breakout trading strategy, and today we are looking at the range trading strategy. Just so that you know, this webinar is organized by Pipsoclock. We are a community of forex traders. We help clients to become more successful in their trading journey, and we do this by organizing educational webinars like this. We provide signals on our Telegram channel. We also have a forex trading academy within the Pipsoclock member area. We also provide all the needed support for our clients, especially when you trade with our recommended broker skilling. There are a lot of benefits to being a member of this community. We have bonuses for your deposit on skilling, and additional benefit like the content on our website, our blog posts, news, and then weekly analysis of the forex markets. But for today, this seminar is going to be on the range trading strategy, and I will get us started quickly, and I will hand over to our coach that is available with us today, Mr. Ifeanyi Uche. Mr. Ifeanyi Uche has been very helpful in dissecting the topics for us in the last 2 weeks. And today is going to also take the next topic, that is the range trading strategy. And just before I hand over to him, I want to also remind you that this series continues also next week with the last topic in this series. For next week, we are going to be looking at news trading strategy. So that will make it 4 trading strategies that we are considering this month. And I want you to be a part of it. You would also receive notifications in your email or via text message. So please, after today, look out for the session for next week so that you can have the entire package and then apply it in your trading and become more profitable. Today, we have Mr. Ifeanyi Uche, who is a forex coach and an experienced forex trader also, and he has been in the industry for over a decade. This afternoon, he will be handling the session and he will be taking us through the topic for today. At the end of this session, there's going to be an opportunity for everyone who might have questions related to the topic or other questions that you would want, to ask us, and we'll be available to answer those questions. So as the session is going on, please note your questions, or you can even put it in the chat so that by the time we want to answer the questions, we'll just go through. Even by that time, you can unmute also and ask your questions directly. Thank you once again for joining us. We'll get the session started now, and I will hand over to Mr. Ifeanyi Uche. Sir, you have the floor now.
Thank you, Leko. Good afternoon, everybody, and welcome to yet another week. I trust you are doing well with your trading. So today, please. Okay, so as Like I already introduced it, we are going to be focusing on range trading strategy today. I want to confirm that you can hear my voice. So if you can hear me, just give me a yes in the chat box. If you can hear me, give me a yes in the chat box. All right, great. Thank you very much. God bless you. Okay. So next thing is to share my screen. I'll present first, then we come to look at practical demonstration of the topic. Okay, so my screen is loading. Okay, so if you can see my screen, let me also confirm that. Just type range in the chat box. If you can see my screen, type range in the chat box. You can see my screen, type range. Oh, great, Jegede, thank you. Thank you very much. Good. Okay, so whatever strategies we present, what we do here is to show you the step-by-step guide for one purpose, profitable trading. All right, so if you learn all the strategies and you're not profiting from them, it's no use. The real reason why we train, we develop our skills is to profit with them. So after teaching you, after showing you, there is a need to also know how to profit with it. That's just what this is about. So we are going to go straight into it, range trading strategy, and we are going to be covering the following. Look at what range trading is about. How do we identify a range? Implementing range trading, and then tips for successful range trading. Those are the 4 things we will cover here. Okay, so quickly, I know that if you just go on Google and type what is range trading, I'm sure you get an answer that may be similar to what you see on the screen right now. Okay, because there are quite tons of materials you can find out there. But then where we have the issue is in the implementation, the application, the practical application. And that is what this presentation, this call will do for you. After we've seen the theory, which is very important, then we'll now look at how do we apply it? How can I practically apply it? Yes, we may not have all the time in the world here today to start checking out practical applications one by one, but I think there are a few tools that we can learn to use and then see how we can even implement it right here, right now, so that you can go back and start practicing them. Now, why would you even, let me digress a bit, why would you even want to learn as many strategies as possible? Why would you want to? Simply because the market is dynamic. The market is very dynamic. Now, in the first week, we treated trending strategy, right? Then the last time we treated breakout. Today we are treating range trading. Next week we have another strategy also. And I can assure you that if we decide that every month we will treat 4 different strategies, I can assure you that in the next 12 months, we have covered all of the strategies that exist in the world. Because strategies are a dime a dozen. And there are some good ones, there are some bad ones, there are some average ones, there are some great and fantastic ones. But then, what's more important? Keep talking about it. Your ability to manage your risk well, and then your psychology, your mindset. So when you're able to manage your mind well, and then be disciplined in sticking to your risk management strategy, you will find out that whatever the system you pick, you will just be able to turn it into a gold mine for you. Discipline, very, very important. Okay, so, and probably the topic today, range trading strategy, a few things we will discuss that help us to actually be more conscious and intentional about discipline, trading discipline. We'll find out as we progress. So from what I have here, which if you Google, you might also find this, that range trading is a strategy in which traders identify a price range within which a particular asset, like a currency pair, it could be stock, it could be a cryptocurrency, it could be a commodity, is trading over a period of time. The period of time could be 5 minutes, 1 minute, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and so on. Now, I did a little study between 2010 and 2020 to check a currency pair like Euro USD, okay, between that period on the 1 hour time frame, what percentage of the time was the currency pair Euro USD ranging, and what percentage of time was it trending? Guess what? Your guess will be as good as mine. That's over 70%, 70 to 75% of the time, Euro USD in 10 years was ranging. And when you check that for most other instruments, currency pairs, is the same or close to the same. That's for 70 to 75% of the time, the market is in a ranging mode. And just about 30 to 20, 25 to 30% of the time, it's trending. Now, during the period when it's ranging, that's the period when the market appears to be clumsy, to be slow, to be quiet, to be boring. And so you must have that discipline not to overwork yourself. And if you have a range trading strategy, you implement it. And then be disciplined enough to observe all of the rules. Remember that the 25 to 30% of the time when the market trends, you never can tell when it will show up. You never can tell when the ranging market will end. You know, last week we treated breakouts. When the market is within a range, it begins to go from one level, call it support, to the other, resistance. It keeps doing that for a period of time. And when it's time for it to get out of that enclave, that's out of that restriction, that range, a breakout occurs. And because you do not know, I do not know, we do not know when the breakout will occur, that's why it's good to observe all the rules, particularly the rule on risk management using your stop loss. Except for a situation where you have a system that you don't place a physical stop loss, but you have something that will counter it for you. Outside of that, never you ever trade without your stop loss, because as it's going up and down, yes, once in a while it could hit your stop loss and you still enter back because it's still ranging. But once it breaks out and then the trend has set in, if you're not using stop loss, that's when you see, oh, you picked, he went on this range before, because there's a temptation that, I think I'm jumping words now, you know, something in my mind and nothing comes in, but let me just go ahead and say it. There's a temptation that happens to traders, because it has happened to me severally, that you find the market in a ranging mode, and then it goes up to a certain price level, it comes down, and then you now feel that, okay, I understand the market now. And for that reason, you begin to now, what you now begin to do is to remove your stop loss so that you don't get caught. So it goes up, it comes down, you pick the sell there, and then you only put your take profit. It comes down, you hit your take profit, and then you buy, and then it goes, or without a stop loss, you may drag that a little, and then it comes back. So it keeps doing that for a period of time. Wow. So you can see, somebody will now say it's good to not use stop loss. And then guess what? You are now used to the market, you as you think. And then all of a sudden, the trend sets in. Okay, what was good before begins to turn bad. And then you think, well, it may still come back. You know, the way it happens when overconfidence sets in into a trader's life, you'll be like, let me go out and do it like I did it before. And then you add to the position. Next thing, it goes further against you. You add and add, before you know it, the next thing you get is a margin call. So these are the things that can happen to a trader. And so that's why, as we progress in this, please pay attention to the guide here, right? So the key idea is to buy the asset at the lower boundary, that's at the support of the range, and then sell it at the upper boundary, which is the resistance of the range. Okay, now, how do you identify a range? How do you identify a range? How do you identify a range? Now, you have three things you may want to use. One is the support and resistance. The other is the horizontal price movement, and then the duration and confirmation. So let's look at the support and resistance. Support is, everybody that comes into trading at whatever level, you need to learn, you need to understand what support and resistance are all about. You need to do that to understand what support and resistance are about. Now, the support, as you are sitting down, I believe you're sitting down and participating in this webinar, you are sitting down and your chair is on the ground, on the floor. Your feet are on the floor. That floor there becomes your support. All right. And if you look up, there's a roof above you. All right. That roof is your resistance. If you want to jump up, and you can jump as high or so high, by the time your head gets to the roof, it hits the roof. If it is a cemented roof, maybe you are living in a decked apartment, a decked house, or in a decked house, yes, your head will hit there. God help you that you didn't open your mouth and your tongue out. If you do, what will happen is that your teeth will teach your tongue a lesson, all right, and blood can come out. But then if not, you just endure the pain. It means it will push you back down, law of gravity. So the same thing if you use a ball and bounce it on the floor, it bounces up, gets up, hits up and comes down. So that becomes the support and resistance level. Okay, so support is the price where the asset tends to stop falling and start bouncing back up. All right, while resistance is the price level where the asset tends to stop rising and starts falling back down. So what I just explained is what is in the next sentence after those two. So next is the horizontal price movement. So when the support and the resistance have been established, the next thing you now observe is the horizontal price movement. You begin to look for the particular asset or currency pair or instrument that has a clearly defined horizontal movement between the support and resistance over a certain period. So you now see, by the time we go to the charts, you see this happening. And then after that, watch, to find a reliable range. So you need to have a duration you have taken into account and then the confirmation. Okay, so for example, now you may want to say, okay, for me, my rule for me to take this trade is that price must touch the support or the resistance level at least twice. So on the third one, I can enter. For example, if you check on the Telegram channel right now, there's a signal that was just dropped there a while ago, just while we're already here, okay, or just before we came in here. What was that? Euro US, if you check on the 1 hour, yes, it looks like it's bullish. Yes, it's bullish. But then price had touched a particular high level, and then this next candle, small though, and the volume also reduced, also repeated that touch. And then the third one was trying to make that up. And I'm like, even though it's bullish, but on a range, because if you look at ADX on a range, it appears that Euro USD is still not trending. So meaning that the pressure is not high enough to push it further high. Okay. Now, this is my personal assumption based on the indicators I've watched. So what did you do there? Okay, so let's sell. Let's sell. So that is just for that, because I've checked, okay, it has touched once, it has touched twice, so let's sell it. All right, so now let's now look at the implementation of range trading. Now we look at for beginners and then we look at for pros. Okay, so let's start with that for beginners. All you just need is to first off choose your assets, and it's better to start with something that you know well already, like go for a major currency pair like either Euro USD or GBP USD or a popular stock that you know that has a clear and observable range. Now you set up your chart, use a reliable charting tool, and then apply a time frame that suits your trade. For example, you may want to go for 1 hour, some even go for 15 minutes or even 5 minutes and so on. And then, or daily charts, if you want to do that, you have the patience for longer term waiting. All right, now draw your support and resistance lines. So from then I begin to draw your support and resistance line. But then, it's good to start by doing these things manually. But guess what? In the course of time too, you also can get tools that can help you do this. So you just come and based on your understanding, you begin to look for the clues and opportunities. All right. Then of course, you now enter into the point of buying and selling. You buy at support when the price approaches the support level. Consider you're, taking a long position or buying. Of course, if you want to wait for the test, you test it and then you buy. And then sell at resistance level. But make sure, like I said earlier on, make sure to always use stop loss orders. Make sure to always use stop loss orders. Now you just look at how you can. Sometimes if I look at the if it's selling that I want to do, if I look at the highest price I wanted to follow, and I see that okay, based on what I have here, I can sell here. I may want to use the high, or if you have your pivot points levels, maybe the next pivot point that's high there, that's the resistance level there. You can put maybe just 5 pips above it, and then set your stop loss for support. You apply, look for the next support level, or use price action to form the support and resistance. Okay, there was a pin bar here, or there was a shooting star here while I'm selling. I'll put it 5 pips above that level and set up my stop loss. So that's for beginners, right? And then for pro traders, you may want to introduce advanced technical analysis using indicators such as RSI, that's relative strength index, or Bollinger Bands, to confirm overbought or oversold conditions near support and resistance. You still bring in your support and resistance levels, and then bring in additional advanced indicators like RSI and Bollinger Bands or Bollinger Bands. You can use either of them, right? Okay, but then just being careful not to paint your chart with too much indicators. All right, then volume analysis is another tool where you have to analyze the trading volume to confirm the strength of the support and resistance levels. When we know where higher level or higher volumes at the levels there can indicate stronger reversals and vice versa. Then you can also want to use multiple time frame analysis where you bring in, check out what's going on 4 hours, check what's going on daily chart time frame, check what's going on 1 hour, and then use that to make your conclusion whether this package should be ranging. And of course, please, trade management is very important. Advanced order types such as trailing stops, you set up the trade is going now, so begin to trade your stop. Or if it moves 10 pips or 50 pips, I move my stop loss to break even. If it continues, I keep trailing it so that even when it turns back, I am still in profit. Or the worst that can happen is I break even. Then scaling and out of positions based on partial profit taking strategies. That is, I mean that you enter with 2.0, okay, maybe it does 15 pips. You could decide to, scale in there and then cut off maybe 0.5 or 1.0, and then bring the other to break even, the stop loss to break even, and then keep trailing and following along as price moves. And then fundamental analysis, of course, you can combine the technical range trading with fundamental analysis to understand the underlying factors driving the price within the range. For example, sometimes there's news coming up maybe in 3 hours time, and there's no other major news happening around. So when you not check that, sometimes that could bring the market to a range gym mode. So maybe every market is just quiet and calm, waiting for when the big event is about to happen. So everybody is just being careful at that point. So a ranging trading opportunity can show up at that point. So you can take advantage of that. Remember, apply all of the trade management skills like risk management, and so on, and correct position sizing so that while you are doing that, as soon as it's maybe 30 minutes or so to the time for the trade, you exit all your positions and then wait for the news if you want to trade it, or wait for it after the release and market reaction, can then come back to continue what you're doing. Remember that over 70 to 75% of the time, the market is in a range, and the 25 to 30%, the market is in a trending mode. Okay, so next, let's look at tips for successful range trading. You need patience and discipline. There's a need for you to always wait for price to approach the support or resistance levels before entering a trade. Avoid chasing the price. So if you have set up your support and resistance levels, allow price to get there, allow the price action to tell you it's time to either sell or buy. Don't chase price. Chasing price can raise your anxiety, and that can actually make you to make impulsive decisions that can be detrimental to both your health and to your account self. Risk management, never risk more than a small percentage of your trading capital on a single trade. There's a need to always use the appropriate position size. And for example, you have $100, 0.1, I think that's the list on scaling, 0.1, then 1,000, depending on what strategy though. Okay, there are some, it may just be 0.1, but 0.1 if you want to get 10 pips, 10 cents rather a pip, where you want $1 a pip, 1.0, and so on. So you can now use that. If you have $100 and you're using 1.0, okay, if it goes 100 pips against you, or 50 pips, you would have lost 50% of your account. Is that wise for you? Why not be patient and disciplined and build it methodically, build it methodically, build it slowly, build it steadily, build it consistently, you know. So next thing is to observe market conditions, ensuring that market is indeed in a range-bound condition. Avoid range trading during high volatility, or I just mentioned that, and then make adjustments, you know, as the market begins to adjust. Also make your own adjustment, be flexible. That's why you must always learn to use your stop loss order, so that sometimes it could just happen to you unawares. And what can save you is that it hits your stop loss. And when that happens, you just check the market. In fact, sometimes you could also hit your take profit order because the market wants to change mood. So you could hit your TP, but when that happens, check what is going on in the market. That's why you need to check other things and be sure, okay, oh, there's news. Oh, let me step, because or there's something that happened. So that's why you may also, beyond the calendar, check out other news sites, RTT News, Bloomberg, and a couple of other news sites. Check out what's going on beyond the economic calendar, so that be always in the know, you know, when things happen, so that you don't begin to guess and do impulsive trading. In conclusion, range trading can be an effective strategy for both beginners and experienced traders. By understanding the basics of support and resistance, employing proper technical and fundamental analysis, and implementing disciplined risk management, traders can potentially profit from the predictable price movements within a range. So whether you are just starting out or are a seasoned trader, range trading offers a structured approach to navigating the market. So we're going to quickly look at a typical example of the two systems that we can use for range trading, support and resistance strategy. So I'm going to stop sharing this and then bring out a chart where we can also, you know, look at implementation of this same strategy. Okay, so let's quickly get to it now. Chart. Okay. It's loading. All right, so if you can see my chart, can I just have you type chart in the chat box? If you can see my chart, type chart in the chat box. If you can see my charts, type chart in the chat box, please. If you can hear me, you can see my chat. Okay, great. Thank you. Thank you. All right. Okay. So now I'm going to use this. First off, let me bring in this in a new chart altogether. Okay, so now if you look at this, just the price charts, I can use my horizontal lines to just pick, okay, let's see here, there's a top here, and then there's another base here. So for some time, price was ranging from here, okay, we went even up all the way here. Yeah, from here to here, but then it got here, came back here, and then came back to test here, went up here, and then came back here. So now when you now look at this, you see that though it was ranging, this wouldn't have given you opportunity to enter into multiple trades. Okay, so at that point, you want to, you may either have entered one trade only and come out here. If that has met your target, fine. But you need to first of learn to set a target. But let's move further away from that. So you can actually, let's say I roll below to 15 minutes. So if you see here, you see that here it was trending based on this time frame. But before that happened, look at this point there. So I may need to bring out another one here. Here. Okay. So based on this one now, price from here came back here, or rather it began from here, came up here. Okay, so if somebody picked a trade here, came out here, put a sell here, came down here, opportunity 1, 2, then put another buy. Now, if you look at it on this lower time frame, you will see that a couple of trades could have been taken from here to here, here to here, and so on until a breakout occurred on this range. All right, so that's based on this lower time frame. Now, if you go if you go further behind, and let's see if we can find another similar opportunity like that. I think there is somewhere around here. So here it could be looks so insignificant, but let's look at here. Okay, so now if you look at this, you see also that, okay, okay, let's ignore the move here, but let's look at between here. From here, it went up here, down, but then only one trade picked and covered here, and then next here, okay? But this is because it has happened in the past, okay? So now for you are coming into the market and you just saw something that's already going on. You saw something that's already going on. At that point, that's when you begin to look at past incidents, what has happened before. So this is where you are drawing the lines manually yourself. But then this is something that, okay, maybe over the weekend or over the end of the day, you're able to come back and do your, analyze and make your inferences, like here again too. Okay, markets, this has happened today, and then you decided to see if I can find a range there. But then the range you're finding is for you to help you in the next phase of the market. Okay, but how about you having a tool that will do all of that for you, so that you just come and begin to look at what's going on to, first of all, know whether there is a trend happening or not. That's where you can bring in these tools like the average directional movement index. This is the ADX. Okay, the ADX is an indicator, if for information, if you are new, that you can find from here under trend. You see the average directional movement index here. So that's it. That's what brings out this. Then you can decide to bring in RSI or Bollinger Bands into this. If I decide to remove Bollinger, I can remove Bollinger Bands, but let's use this two as it is for now. I can decide to remove Bollinger Bands and use this indicator. Now, this indicator is called support and resistance. So it just keeps pulling it for you. Now, if you now look at it, you see levels that you had gone past. But the first thing you do as you come in is to check, is the market trending? And that is where you can deploy the ADX. And the ADX, if you check the ADX, you see you can get some figures with the ADX. And now there are 3 lines there on the ADX chart. Now the first line, let me look at this color. Usually I turn it to red. Let me adjust it and make it red. Okay, then the other colors, you can make this blue. Well, okay, you can make this blue and make this yellow or gold. Okay. So now the red there is what we use to indicate if the market is trending or not. It's just the value that you use. As you point at it, you can see here, you can see average directional movement index. The period is 14. You see the time. After that, you see ADX, 33.43. You see the figure there. So that figure, the 3.4318, tells you the level of the ADX, and that's what you can use to determine if the market is trending. So at what level is the market trending with the ADX? When the value of the ADX is above 25, the market is trending. So when you see it here at, the ADX here is at 38, is trending. At 20 something here, right, is trending. At, let me see, this thing is blocking my view. Okay, let's see, at this point, at 41 is trending. But when you come to this point at 23, it means that the trend has dropped. The trend is weak now. So all the way, if you look at from here, the trend began to drop. From 28, it dropped. 27, it dropped. 27.6, it dropped. Then here to 23, now 22. So around here now is 23, 22, it rose up again to 28. Okay, so now at the period that the ADX is below 25, you just come back and check the Bollinger Bands. Bollinger Bands is flat around that period too. And now the support resistance indicator also is creating resistance and support levels for you. The blue lines, dotted lines are the support, while the red dotted lines are the resistance levels. So once you have confirmed that, the next thing is to work on your rules. Okay, do I want to wait for this resistance or support to be tested twice, or do I want to be aggressive? But it's better you are a bit conservative, not aggressive. So wait for a test, retest and confirmation. So in which case, if I see here, okay, that price, look at this particular one now. First off, I check, is it trending? 24, okay, and around that point, price pushed up. We are not using volume here at the moment. Price pushed up, tested this resistance here, and the next one tested it and closed here. So by the time this next one put up, this has already indicated to me there's a confirmation that it has tested this and doesn't have the momentum to break past it. So I can actually sell here and then wait for price to. Now, two things you can do here: set a target because it's ranging. All right, you can take your time to determine the length or the height, the size of the range. So what that means is that will help me to determine what I should target. But you can actually decide to do your mental targeting by saying, okay, for every trade I take within this ranging market, I'm targeting between 5, 10, 15 to 20 pips maximum. So I pick it. If I take this, let's say, for example, this particular one, you enter a trade here. Okay, and then stop loss will be above this place. That's around less than 10 pips. Less than 10 pips, and then I'm targeting here. I'm targeting here. But remember, remember as it enters here now, this one has happened already. This particular one has happened already because that's where he picked up to go to this point. So I can target here. So here is even up to 17 pips. So, but then I wouldn't want to wait for it to get up here. I want to just focus before I get to this level. I exit 10 to 15 pips. I'm out. Okay, you now wait again. It broke past this, came here, formed under support, and this one couldn't reach that level. So the next one, if you're able to take this, fine, but otherwise, you could also enter as you see this pattern here. To now, in fact, if the support also showed up here, means that you can actually enter maybe on this other one. But if you had entered here, your stop loss should be below here. So meaning that by the time it came all the way here, it still wouldn't stop you out until it starts going back up. And then as another resistance level is formed here, you want to get out because you were expecting for it to get up here, but this one, that when this auto indicator is important for you because as it forms a new resistance level lower than the previous high, it's telling you something. The market is about to begin to tilt down. So that's the advantage of using this kind of indicator. So even if you're a beginner or you're a pro, all you can just do is to learn to use this, okay? And then do your trading. Okay, so then you can actually work on other instruments. You can actually work on other instruments and superimpose this on them and keep on checking. So long as you are just doing this and you are using your stop loss. For example, let's say at this point, let's look at this particular one here. Let's say at this point, price got to this place, okay? And remember, there's a support that started at this point. So it formed here, and then as you in here to buy, okay, this one could have actually placed, taken the buy, but then short profit. And then it came down here again. You are hoping that at this point, I will buy again. Then this one now closed, formed a hammer, or it's both a hammer and also like a hanging man. And then you say, okay, let me buy at this point, at this one. But if you buy at this point, you have not waited for this to confirm it because a resistance was formed here. So if you buy here, you have not waited for it to confirm. So the ideal thing would have been to wait for this one to open and close above this support that was formed here. So if that happens, then you can now buy. But how about you decide to be aggressive and then you place a buy here and then put your stop loss below the low of this, say 5 pips, then this would have become a loss because your stop loss will be hit. And in the process, you can see the Bollinger Band is gradually bending, meaning that it's showing that it's being stretched now to form a downtrend that though it was not, it didn't last. Now, if you also check at that point, check the ADX level. The ADX level actually was around 24.95. It was about rising. So before it got up to this point to 28. And 28 now, I didn't talk about this yellow one, the golden color and the blue color. The blue color, whenever the blue color, that's a ADX, is below the yellow one, it means that the buying pressure is low and selling pressure is high. That's just this. This one is plus DI, while this is minus DI. So the minus DI represents selling, while the plus DI represents buying pressure. So, or bullish or bearish, whichever one you choose to call it. So whenever the minus DI is above the plus DI, so that's a way to, because so if you use color now, you open yours, you may not see this color. So you just point to it, you see it's minus DI, that's negative directional index, while this is plus DI, which is positive directional index. So whenever the plus DI is above the minus DI or the negative DI, it means that the market is bullish. But then being bullish and trending, they are two different things. So at this point, yes, is bullish, okay? However, is it trending? At this point, the trend says 38%, 38 points rather, 38, meaning that it's trending around here. So could actually look for opportunity to buy. But where it falls below 25, it means that it's not trending. So that's how you could use this actually to apply a range trading strategy. Time will not permit me to go into other strategies that I use. You can also use hedging when you are applying range trading. And we have done hedging in the past, but maybe we'll still bring in hedging as a strategy in the coming weeks. But then you can also apply hedging to this. I think I'll pause here and take any comments or questions. Thank you very much for your time watching.
Thank you, Mr. Ifeanyi, for the session. I want to believe that you are all following. Now we want to take your questions and answers, so that we can provide answers to them. I'd like to know, does anyone have a question? You can put it in the message, or you can unmute your mic and ask your question. Okay, if there's no question, I will quickly go on to talk about a few other things now. First is that next week we would have another trading, we'll discuss another trading strategy. That's the news trading strategy. So we'll discuss that next week is same time, 12 p.m. Same time, 12 p.m. next week, Thursday. Someone is asking, can I get the support and resistance indicator used in this training? Mr. Fine, can you provide answer to that? And there's another question. Does it mean if you are using Bollinger Band, if you are using Bollinger Band, can't use moving average? Okay. If you
Okay,
are using
okay,
Bollinger Band,
okay, okay.
can't you
I get
use?
the second question here, but the first question I can't see it.
Okay, it's
The
just
first question, please.
can I get the support and resistance indicator used in this training?
Okay, yes, you can. You can get it, yes. Like here we give out things for free, but the condition is just fund your account. Later on we'll talk about that. The indicator will be made available to you. Okay. All right. So then, does it mean that if you are using Bollinger Bands, you can't use moving average? Now, if you look at Bollinger Bands, it has moving average 20 in the middle. All right. So, but then you can also use, but then you can decide to use them separately. You can decide to merge them if that forms part of your system. It's just about what are you looking for. You can use them both. You can use them individually, but it's about what you are looking for. So you must decide what you are looking for before you decide on the indicators to use. And then the other question there say, can this strategy be used on phone? Of course, except for the indicators. But if you want to just find your support and resistance manually, why not? You can use it on your phone. Bollinger Bands, you can also put, if you install the mobile MT4, you can also find Bollinger Bands in the mobile MT4. All of the indicators, you can find them on your MT4. You can find literally all the tools in your mobile MT4, okay, except for this custom indicator that they are asking about. That one you can't find them.
Thank you, sir. Thank you for providing answers to that. Is there any other question? Any other question before I continue? All right, thank you, everyone. So I was saying that the session continues next week, same time. It's going to be on a Thursday by 12 p.m. So we'll discuss the last trading strategy that we are considering for this month, the news trading strategy. So please be on the lookout for our invite and please be a part of it. Skilling is a recommended broker. Skilling is a regulated broker. If you want to, I want to believe a couple of you already have a Skilling account, or you can go to pipsoclock.com/broker/skilling, or you can go directly to skilling.com and you can log into your Skilling account. And if you want to perform any other transaction, you can do it directly on Skilling. If you need help from us, we are always available to assist you with whatever help you need regarding your Skilling account or your trading generally, depositing, making withdrawals from your account. You can always contact us via our email, help@pipsoclock.com, or you can call us on 0201-3306030, or you can message us on WhatsApp 08058146723. So these are the ways that you can get through to us. Why skilling? Why skilling? Um, Skilling has a lot of benefits. You can enjoy superior trading on skilling. The conditions are very trader friendly, and there is a lot of instruments that you can trade on skilling. The spread is as low as 0.5, and then the user experience is top notch from the trading, the deposit process, and also the withdrawal process. Everything is user friendly, and I want to believe those of you that have started using Skilling, you can testify to that. The customer service is top notch. There are a lot of ways that you can get in touch with Skilling. You can initiate a live chat on the Skilling website when you go to skilling.com. You can send an email to support@skilling.com. You can also, yes, send an email. There are also contact numbers, and you can also reach out to us if there's anything you want us to assist you with. Skilling is fully licensed and regulated. I want to believe that you understand the importance of dealing with a regulated broker, a broker that is licensed. Your funds and personal data are fully secured. And there are a couple of platforms you can trade with. If you're familiar or you prefer Skilling MT4, you can trade on MT4. There's also the C-Trader, an advanced trading platform. You can also trade on C-Trader is available. We also have the Skilling trader platform. So you can also use that to perform your trading. The leverage is up to 1,000, 1 to 1,000. There's a welcome bonus for every new client that are making their first deposit. When you make your first deposit on Skilling, you can get a $30 welcome bonus, and that's first deposit of $25 and above. So if you deposit $25 into your account, you get an additional $30. You can withdraw, all the profits you make with this bonus. You can't withdraw the bonus. You can withdraw your profit, and when you deposit 25, you get 30. It means you have $55 as a starting bonus, a starting capital on Skilling. There's also the 100% exclusive bonus for Pipsoclock members. If you make a deposit of $50 or $100, you get 100% on that. You get 100% on that. And the bonus is not withdrawable, but every profit you make from this bonus, you can withdraw all your profits on this bonus. There's also another very good thing on Skilling. Every week, there are selected trading instruments that you enjoy no fees on the trading. So no commission, no markups from Mondays to Friday. For this week, NZD USD currency pair is on the 0-0 campaign. So you can trade NZD USD this week without being charged any commission markups or anything of such. If you are not on our Telegram channel, please join our Telegram channel. Just go to t.me/Pipsoclock. On our Telegram channel, you get first-hand information about what we are doing. Also, you will get signals, trading signals on the Telegram channel. So please be a part of the channel. Just go to t.me to join the Telegram channel. So that's all the information I want to add. Thank you for being a part of this. Okay, the recording for this session will be made available on this Pipsoclock member area. Madam Ekishola, I apologize that the one for last week is not there yet. It's going to be there. We'll work on that so that the recording for last week will be there. Then this current session will also be uploaded in the Pipsoclock member area. The way to access the Pipsoclock member area is to go to pipsoclock.com, click on member login. Just log in with your email address and your Pipsoclock password. If you have forgotten your Pipsoclock password, just click on the forgot password link, then follow the process to reset your password. It's that easy. Once you get into the member area, go to follow through on the navigation. You see a place for webinars, and then you can watch all our past webinars. So the one for this week will also be uploaded there, and then you can access it. Thank you so much for being a part of today's session. Next week, please also be a part of the session by 12 p.m. next week. The benefit for being a part is that you can experience it live, you can ask questions, and then there might be offers, new offers for you to take advantage of. Thank you once again. Thank you for staying with us and for trading with Skilling. And we have come to the end of the session now, and we'll be saying bye-bye for now. Enjoy the rest of your day. Thank you, Mr. Olushola. Thank you, Mr. Basi Okon, Mr. Emmanuel, Madam Ekishola, Mr. Leke, And thank you, Mr. Ifeanyi, for anchoring the session for today. Thank you, everyone.